I'm delighted to be able to do this now, and that is to introduce our guest speaker tonight. As you can see from the slide, I mean, realestate.com.au has been a business that River Capital has had a long and, as you can see, profitable relationship with. I described the business in 2007 or 2008 as being a small niche business. It was more than that, but it was a business that was very much on the way up at the early stage of its journey, 50% owned then by Rupert Murdoch. In fact, if you've been following the press over the last week or two, you will have noted that I think when Lachlan Murdoch invested a couple of $1 million in this back in the early 2000s, that investment now on News Corp's books is now a $2 billion investment. So I know Lachlan copped a lot of flack for OneTel, but probably didn't get the credit that was deserved for this. It's been a stellar investment, and I know, speaking to Greg, that even though Rupert might not have known a lot about the business 4 or 5 years ago, he's keenly and acutely aware of it today. Our guest tonight, Greg, was appointed Managing Director in 2008. What we're delighted about is not only presided over a business that revenues have been growing strongly, but importantly for shareholders, exponential profit growth. Greg's done an amazing job, continues to do a great job, and we really welcome him tonight to share a few insights and to take any questions that you might have. Thanks, Greg.
Good evening, everyone. It's always a pleasure to speak to our shareholders. I'd like to thank Barry for the opportunity to talk to you this evening. As REA Group investors, you've been no doubt watching the changes that have gone on with interest in the dynamics of the Australian media landscape. Earlier today, I participated in a press club conference that was presided by Robert Gottliebsen with Greg Roebuck from Car Sales and Andrew Bassett from Seek. And there were 3 conclusions that really paralleled each business's success. And they certainly were a focus on the market, more than focus on the internal politics of the company, a very big focus on culture and people, and an absolute desire and focus on innovation and the progression of innovation. They were the 3 characteristics that typified the 3 organisations' success. Certainly from an REA perspective, we've unquestionably benefited from the structural shift that's gone from the traditional media to online. Having said that, there's much more to our success than just the structural migration that's occurred. When I joined REA in September 2008, the business was 13 years old. It was a profitable business at that time. We had operations in 11 countries, I believe, at the time, and certainly Australia was funding most of that overseas growth. If you remember back at that time, that was just prior to the advent of the GFC, and prior to the full impact of the GFC, we undertook a review of the businesses that we operated, and that saw us exit probably 7 businesses in 9 months. And we made those decisions either because the businesses were not in a strong market position, that is, they were not number one or no prospect of being number one. The businesses were too small in the markets that they were operating. So we had a business in New Zealand, for example, which only has a population of 4 million. Or the market itself structure did not suit an advertising model. And an example of that was Dubai. So when Dubai is booming, properties sell literally in a day. There's not too much demand for advertising when they sell that quickly. And of course, when boom and bust markets like that move to the other side of boom, there's not much demand for advertising either. So for those 3 reasons, they were effectively the lens that we put over those assets to decide that Australia, Italy, Luxembourg and Hong Kong would remain in the portfolio. We also recognised the need to diversify our revenue, which was predominantly reliant on subscription revenue, which is a charge made per agent office in the residential sector alone. When I joined the company, that number was over 60% of our entire revenue, just from that product set from that sector. We realised that we also needed to behave a little differently. There are 3 phases of which a company can operate. One is startup, one is growth, and then you're moving into the larger scale mature organisations. And one of the observations that I made is that REA had not worked out that it made a transition from start-up to a growth phase company, and that requires a different management approach and different management principles on how to run a growth business that's becoming a big business as opposed to a 30 or 40, 50 man startup. It's almost been 5 years since that transformation process is done, and today we've got growth coming from our residential business, our commercial business, our media and developer business, and as at the half-year results, 11% of our revenue is coming from our overseas businesses. Our financial results really speak for themselves, and I won't focus too much on them, but it is just important to remind the shareholders that for 9 consecutive halves, we've delivered revenue growth, EBITDA growth, EBITDA margin growth, EBIT growth, EBIT margin growth, and cash growth. So let me tell you a little bit about the story or the journey that we've been on that's allowed us to achieve those market and financial results. Certainly our goal was to create an environment within innovation could work within the company, but it's extremely important to understand that the innovation that we conduct is set within a purpose. So we're not a strategy-driven company, although strategy is important. Our employees come to work every day because they want to make the buying and selling process of property more efficient for everybody that participates in that process today, which is people looking to buy property, people looking to sell property, and the broking community that services that transaction. So we set about ourselves overhauling our technology and processes and product offering with that purpose in mind. And the purpose is supported by a strategy and budget. But from my mind, if you focus on the human being for a moment, people never attach to a strategy. They never attach to a budget. You're likely to get very focused delivery if people attach to a purpose for why your organisation exists. And if that purpose delivers a good social outcome, people are really become engaged in that organisation. And I'd have to say that that's one of the critical aspects that we've been able to convince ourselves and our people that our purpose is about simple, efficient property, and that drives the guiding principles that make our products fair and easy to use. It is true to say that when I joined the company, our technology legacy was outdated and holding us back. And in 2010, we completed a major technology change which saw us reinvigorate realestate.com.au. It is fair to say today that there isn't a single piece of code left in the company that was there in existence in 2008. We've also overlaid the way in which we run our company through, if you're technology minded, there are some principles called lean and agile. Some very famous companies such as Toyota, when they had their successes in the 80s, were the instigators of the lean technology, and we use lean and agile methodologies in running our company today. You might ask the commercial benefit of that. The commercial benefit of this is that every 3 or 4 days we're in a position to release either new products or modification of products across our entire portfolio. And that is indeed a major competitive advantage of this organisation. As we announced in February, our listings growth or depth growth, which we launched over 2 years ago, has been a key driver of our growth. In the half-year results recorded, there was a 45% growth in revenue, half to half, on the subscription on the listings products. We've also introduced individual listings for a reason, and that is the property owners themselves can go into our site and upgrade their own ad. Now, we really encourage the property owners to become far more involved in the selling of their property with their broker, but you today can see the reports and how many people are looking at your particular property. You can ask your agent how it's comparing with listings that they've got within their own office, and you can use the information that's available to make an informed decision about whether your property's been positioned correctly in the marketplace. I've spoken a little bit about our people. We've now got 700 people across our 4 geographies, and for some 2 years we've had a business partnership in Xi'an in China. Xi'an, if you're historically reminded, is where the Silk Road used to end, and it was the historical capital of China. It's southwest of Beijing. We've got some 70 developers that sit up there and work in collaboration with our Australian development team. In terms of our people, we've consistently surveyed our people through a company called Towers Watson. Towers Watson survey 400 companies annually, And the purpose of that survey is to determine employee engagement with your company. It's very proud to talk about the fact that for the last 2 years, not only have we surpassed the Australian best practice for engagement, we're now in what Towers Watson call their high performance norm, which is the top 20 companies worldwide on whether people are engaged and motivated and think that REA is a good place to work. Certainly when it comes to people, our philosophy has been to select well, have the right organisational model, and make sure that people understand their role and the direction that you want them to work. And to address the first point of selecting talent, we're not looking for people who want a job, we're looking for people who align to the purpose of the company. So if you're interested in a cheque for REA, from REA, that's not the right starting principle. You've actually got to be aligned to the reason that we exist, and you happen to get paid is the outcome of that. In terms of selecting our people, we focus on 3 very simple criteria, which we put a methodology through. But we're looking for incredibly high skill, we're looking for incredibly high self-esteem, and we're looking for incredibly low ego. If I was to provide some advice to you as an investor, if you can find a way to overlay those metrics, I would suggest that there's a very high correlation between those 3 variables and ongoing success. I'll also draw attention from the larger pool of employees we have across Australia and our international group, where we also cross-pollinate and have people move in and out of our international operations. On the second point of the organisational model, we've moved away from the very traditional structures of either being a P&L structure or a functional structure, or God help you if you happen to work in a matrix structure. And again, if I can give you some advice, if you're investing in companies that have a matrix structure, my suggestion would be to review. It's having worked in a matrix structure, it's a process that's designed to destroy the human spirit and innovation, and it doesn't provide any sort of commercial return. We run a line of business structure, which means we put our teams lined up against the market. So we run a horizontal structure, not a vertical structure. And we put a management as the management overlay of those 3 teams. To my final point about letting people do their jobs, I made a comment today at the press club that I think one of the major risks that Australia faces, and it's one of the challenges that the media companies have traditionally focused on, is their managerial style. They are a command and control structure, and to our point, we fully believe in letting people have within controls of financial delegations and responsibility, but putting the right people in the right place at the right time with the right resources, and then letting them do their jobs, which practically speaking would be better than me designing particular products. Finally, I'd like to make a few comments about the future. The market is becoming increasingly fragmented, and we've seen many disruptive forces coming. We're only all too aware that we need to stay focused. We know where our next competitive threat is likely to come from, and that is simply, today we're involved in the listing of the product and the advertising of it, but the next solution, which we're well on the way towards evolving so that we're participating in this, is if there's a single place you can go to make your entire property process work simple and efficient. So for your mortgaging, your energy connection, your utilities, and you happen to be able to find the right real estate agents to sell it, that's where realestate.com.au should be going. Now, we know that we have a lot of work ahead of us to do. We're very clear on our purpose. We're very clear on what our consumers, customers and property owners want, and our focus is on them, not so much on the competition. We think with our people, the right strategy and our focus, that we can stay as a successful company. To give an indication of our success to date and our focus on continually challenging the status quo, when I joined the company, mobile downloads was not a feature of our design. 2.5 years ago, we made our design focus to be mobile first, and in March this year, we passed 2 million downloads of our application for realestate.com.au on the Apple devices alone. We would fully expect that by the end of this calendar year, most of the inquiry to our sites would become from portable devices over desktops. It's something that we anticipated 2 years ago, and we're well on train to be maintaining our market leadership of that. But most of you are sort of a similar vintage as myself, and you'll remember a fellow that could play an average game of tennis called Rod Laver. And he made a quote that said, the time your game is most vulnerable is when you're ahead. So never give up. And our certainly intention is not to. Thank you.
What Greg didn't say, interestingly, the profits of the three companies, REA, Car Sales and Seek, are heading towards $500 million. Their market values collectively are now $10 billion. Fairfax has a market value of under $1 billion. So it's been an incredible transformation and shift of value and wealth when you look at Car Sales, Seek and REA versus Fairfax, which owned that market only 10 years ago. Thanks, Greg. Thanks, Jerry.